This forum could not be more relevant, and hopefully, having the Insurance Commission alongside key industry players will help shed light on some of the most crucial aspects of insurance, as well as highlight the significant role that insurance plays in our economy. As of June 30, 2022, the insurance industry's total assets already amounts to 2 trillion pesos. That's almost double the assets held by insurance companies in 2016. We expect further growth as insurance companies continue to increase their capital to meet the 1.3 billion pesos minimum net worth requirement by the end of the year. In terms of premium income, we have seen a remarkable 50% increase in 6 years. That's from 253 billion pesos in 2016 to 379 billion pesos by the first half of 2022. The country performed better than average in the world during the pandemic. While an OECD report on global insurance market trends in 2021 showed that in average, gross premiums declined by 3% in 60 jurisdictions over the world during the pandemic, the industry's premiums grew 308 billion pesos in 2019 to 331 billion pesos in 2020, showing approximately 7% increase in gross premiums. Now, while the Philippine insurance industry continues to grow, these numbers still lag behind other jurisdictions. For example, our insurance penetration rate, which refers to the total insurance premiums as a percentage of a country's gross domestic product or GDP, has not gone above 2%. That's 2% in the past 6 years. This is low compared to other jurisdictions and even in ASEAN, where Malaysia has a 5% insurance penetration rate, while Singapore is currently at 10.9%. Outside of ASEAN, we can look at the member states of the Organization of Economic Cooperation and Development, or OECD, which has an average penetration rate of 9.4%. In the September 9, 2022 report of the Manila Times pointed out that the Philippines lags behind its ASEAN counterparts in terms of financial literacy. These relatively low levels of financial literacy in the country certainly contribute to the slow growth of the Philippine insurance industry. Now, there are various factors and reasons why the Philippines lag behind other countries in terms of financial literacy and insurance awareness. Here, I wish to pinpoint and discuss these factors and measures that the Insurance Commission, undertakes to address these issues. So, the slow growth of financial literacy in the Philippines can be attributed to several factors. On the economic side, the prevalent poverty contributes to the low financial literacy in the country. Despite being among the fastest growing economies in the region, poverty remains to be a pressing issue, with the Philippine Statistics Authority reporting as many as 3.5 million families to be living in poverty as of 2021. For these families which already struggle in meeting the most basic necessities such as food and shelter, insurance is a discretionary expense. And this is true not only in the Philippines, but in other jurisdictions. In an OECD study, it was found that insurers all over the world experience a decline in their premium income as consumers reduce discretionary spending, which includes insurance. in order to manage the impact of the pandemic. And because the Philippines has more people below the poverty line, the insurance industry has experienced a steeper decline in premium income. Now, on the cultural side, insurance has a negative connotation, with many still associating it with death, accidents, and other unfortunate events. This negative reputation surrounding anything insurance related tend to make insurance products less appealing to many Filipinos. I'm sure all of you have experienced talking about insurance probably to your parents, and they would say, why are you talking about insurance? Do you want me to die? Do you want to claim? These ideas continue to linger. In addition to economic and cultural reasons, other factors like geographic constraints also limit access to insurance and financial literacy programs, which in turn affect the growth of the insurance industry. As the Philippines is an archipelagic country, farmers and fisher folk in far-flung areas tend to have a very limited access to financial products, including financial literacy programs. Unfortunately, for this particular sector, the move towards digitization insofar as financial products and services are concerned remain to be of little consequence as of present. Finally, another crucial factor which affects the demand for and interest in insurance products is the perceived unreliability of insurance companies. For many Filipinos, still air concerns on the timeliness of their claims payments, further discouraging them from availing of insurance products. Past experiences of claimants on insurance and pre-need companies which have gone bankrupt have likewise negatively affected consumer interest in insurance. Having said that, your IC, the Insurance Commission, continues to put in place measures to improve the level of financial literacy in the country, improve the insurance penetration rate, and address issues and misconceptions related to the insurance industry. One of the IC's key initiatives in addressing the low financial literacy and insurance penetration rate in the country is the introduction of microinsurance in the mid-2000s to cater to the needs of Filipinos in the low-income sector. Microinsurance was intended to complement microfinance and microentrepreneurship. Since then, various initiatives have been launched to further develop and expand the reach of microinsurance in the country. In fact, one of the key features of Republic Act number 10607, or the amended insurance code, which was enacted in 2013, is a provision on microinsurance, which aims to provide coverage to low-income families or individuals with limited savings. Hence, under the law, the amount of premium for microinsurance products must not exceed 7.5% of the daily minimum wage in Metro Manila. So if you compute that, if the daily minimum wage is at 500, on average 7%, that would be probably 35, 40 pesos in premiums. Now, the microinsurance sector has grown remarkably over the years. As a matter of fact, the Philippines is known to be, at the forefront of microinsurance. As of the second quarter of 2022, the contribution or premium production of the sector has reached 5.5 billion pesos. This reflects a 197% increase from the 1.9 billion pesos in 2017. Now, the growth of the microinsurance industry is a product of the coordinated efforts among the IC, the private insurance companies, and of course, the BSP and the SEC. The IC, in addition to issuing rules and regulations, also conducts financial literacy seminars and workshops in different provinces. These activities aim to educate the public about the salient features of microinsurance and how it could help improve their financial literacy, resiliency. The IC also collaborates with other government and financial institutions such as the Banco Central and the Securities and Exchange Commission in conducting the annual Financial Education or FinEd Expo, which aims to promote financial awareness, improve financial management, and clarify issues and misconceptions about insurance. Now, to ensure greater financial inclusivity and in order to properly cater to the demands of the highly digitized business environment, the IC also encourages and supports the use of various technologies and insurtech innovations. As a matter of fact, to date, the IC has already issued guidelines on the adoption of a regulatory sandbox framework, not only for insurtech innovations, but also for fintech innovations in the pre-need and HMO industries. Now, for those who aren't aware, a regulatory sandbox is a framework which actually enables companies, insurance, pre-need, or HMO companies, to collaborate with technology and other innovative partners in conducting live experiments in a controlled environment. This allows companies to test run innovative ideas for which no regulations currently exist under a smaller scale. We believe that the implementation of the regulatory sandbox framework is a defining moment in the Philippine insurance regulation, as it allows, again, companies to experiment on a smaller scale on products where there is no current regulation. If the experiment works, then we can replicate it. We can issue regulations that would, of course, encourage the entire industry to undertake whatever it is that was successful. Those not successful, of course, we stop, we limit, we issue regulations to control them. Now, the IC also leveraged technology at the height of the pandemic. Back when social distancing measures and travel restrictions were strictly imposed, thereby rendering the traditional face-to-face selling of insurance products impracticable. To remedy this and to ensure continuous operations of insurance companies, as well as the unhampered access of the public to insurance products, the IC, your IC, allowed the remote selling of insurance products through the use of video conferencing and other technologies that support remote communication. Recognizing the benefits derived from this arrangement, the IC later on institutionalized remote selling as a permanent mode of selling insurance products. To supplement this move, the IC also issued guidelines governing the electronic commerce of pre-need and HMO companies. The IC also makes sure that insurance companies and other regulated entities deliver on their promises to beneficiaries and claimants to ensure the integrity of the financial market. One of the key measures taken by the IC was the streamlining of the audit process of IC-regulated entities to provide a more timely information, not only for decision makers, but also for the IC in relation to crafting and enforcement of relevant regulatory enforcement measures. This, in combination with the increase in minimum net worth requirements provided in the amended code, ensures that companies have sufficient buffer to pay claims as they occur. Now, what I have cited are just some of the measures and initiatives that the IC has implemented and carried out. As a regulatory body, we continue to work to promulgate sound policies that will foster growth for the industry and protect the welfare of the insuring public. Nevertheless, we recognize that it may take some time before we see the impact of the measures currently being undertaken by the IC, and that these measures are not sufficient to tackle all issues and difficulties faced by insurance companies. As can be observed, the growth of the insurance industry in the Philippines is mostly driven by the amendments to the insurance code in 2013. And given the change of the socio-economic landscape, changes in the financial market, and in global standards, the IC thinks it is high time to revisit the existing amended code. And among the proposed amendments is the inclusion of the HMO and pre-need industries in the coverage, since these industries are also being regulated and supervised by the IC. For those who are not aware, the HMO industries regulation was transferred to the IC via a presidential order. And to date, we have no laws governing HMO or the HMO industry other than what the IC issues. And then we believe that, having a law that would govern this would provide more structure and power for the IC to regulate this industry. Now, on the role of the insurance in our economy, well, as we all know, insurance has been proven to be an effective risk transfer mechanism, which helps individuals, families, and even businesses recover from financial loss or losses caused by unfortunate incidents such as sudden death of the breadwinner in a family, unforeseen events like accidents, as well as act of nature and other calamities. Insurance also plays a critical role in improving our resilience against extreme weather events and natural calamities. This is important because the Philippines was named as one of the most disaster-prone countries in the world. Being in the Pacific Ring of Fire, the Philippine archipelago is seismically active and experiences frequent earthquake and volcanic activities. On top of this, the Philippines is also located within the typhoon belt, exposing the country to an average of 20 typhoons every year. One of the more recent destructive typhoons that we had is Typhoon Noru, locally known as Karding, which left an estimated 3 billion pesos worth of agricultural damages, 23 million pesos worth of infrastructure damage, and a death toll of 12 in its wake. In times like this, insurance would help the government in rebuilding devastated communities. Instead of government shouldering all recovery efforts and programs, insurance can help in acting as a safety net that cushions the effects of disasters by providing readily available financial assistance to beneficiaries and claimants. The insurance industry also helps finance the government through the company's investments in government bonds. It likewise powers the economy and the corporate sector through investments in stocks of companies listed in the stock market. Back in 2019, the Insurance Commission even issued a circular to encourage insurance or reinsurance companies to be key enablers and participate in the infrastructure investment programs, which is aligned with the government's Build, Build, Build project. In summary, insurance has a big impact on the economy, in the society, and in the individual. Thus, it is the goal of the IC to ensure that every Filipino understands the relevance and importance of insurance. Even though the insurance industry is smaller compared to the banking sector, the industry is still of great significance as it holds over 2 trillion pesos worth of assets that can be utilized to further fund and develop our economy. To this end, the IC continues to hold financial literacy programs and seminars to improve financial literacy in the country. At the same time, the IC continues to issue and promulgate regulations to ensure proper and timely handling of consumer concerns. Recently, the Financial Consumer Protection Bill was passed as an act, and the IC, together with the other financial regulators, have started crafting an IRR on consumer protection, which we hope will be, finalized by the end of the year and issued next year. So rest assured, the Insurance Commission is doing everything in its power to promote the growth of the insurance industry, including supporting and pushing for the amendments to the insurance code so as to ensure the growth of the industry without compromising consumer rights. That said, we in the Insurance Commission expect our regulated entities and partner organizations to work hand in hand toward the realization of our shared goal, that is to build a financially inclusive society for Filipinos. I hope I have shed light to certain matters which concern us all. Once again, Danforth, thank you. Thank you to the Manila Times for this opportunity, and I hope that this will be an interesting and enlightening session for all of the participants. Maraming salamat po.